Hi there, good morning. You're watching Market Cafe. This is ET Now, and I am Snehi Shah, and with me is Lisa Fernandez. Wishing you a very good morning, Lisa. We already seem to be dressed for the Christmas rally. I am feeling the festive cheer already.
Let's see who wins also in the market today.
Yeah, well, it's a bull versus bear, so let's see what happens today. Let's hope the market's tilt towards the green rather than the red. But with that, let's kickstart the show. In the next hour or so, we're going to take you through all the important stories globally as well as on the domestic front. In the second half of the show, we'll also go stock specific and look at all the stocks that brokerages are flagging out for us this Monday morning, as well as the stocks that could be potential buzzers in today's trading session. With that, let's kickstart the show with the global handover that Lisa has tracked for us. And Lisa, take it away.
Right, it's Monday today and it's the start of the final full trading, a week of the year, because next week it's a truncated week. So let's see how it pans out. But stock futures were trading flat with a positive bias. And if I look at last week, all the three major US indices, they closed higher for the 7th straight week. S&P 500 marked its longest weekly gaining streak since 2017. Now, as we know, this rally that was post Fed Reserve, which indicated 3 rate cuts in 2024, and that is the reason we saw the upticks coming in for all the indices. Talking about Dow Jones, it closed at record high. S&P 500 as well as Nasdaq, they are less than 2% away from the intraday record high. Now, the economic data which investors have to keep a watch on, that's the December Business Leader Survey as well as Housing Market Index results will be out. And let me mark the dollar index also. The dollar index is at 102 level and it's down. If I talk about a YTD basis, it's down around 0.9%, and it's putting it on pace for its first negative year in 3 years. So that's about dollar index and the US market as well. But shifting focus on the European market, nothing much happened on that front. It closed slightly higher on Friday, and the European stock 600 index, it gained for the 5th consecutive week. So that's what's coming in. That largely sums up the US as well as the Europe handover coming in, Snehi. But crude as well as other commodities, check what.
Absolutely, Lisa. It's looking a little topsy-turvy for crude also as we speak. And Brent and US crude futures finished at a small loss following a seesaw session in which prices fell more than $1 a barrel at one point on Friday as traders tried to reconcile the mixed signals for oil demand in the coming year. Now, as we speak, Brent is just at that $77 per barrel mark, WTI at 71.8, very close to 72. Now, the market tumbled earlier in the session after a New York Fed Reserve Bank manufacturing survey showed a third month of declines in new orders, which could be a sign of weaker demand for oil in the coming year. Traders were also shaken off by comments from New York Fed Reserve President John Williams on Friday about hopes for interest rates cut in the coming year. Remember, he said it's a little premature to talk about interest rate cuts just yet. Now, the dollar also fell to a 4-month low on Thursday after the US Central Bank and Powell's comments, seeing signs lower borrowing costs are coming in 2024. As Lisa mentioned, the dollar was broadly steady also on Friday. A weaker dollar makes dollar-denominated oil cheaper for foreign buyers. So this is a key point to remember when we're trying to link dollar and oil together. Now, world oil consumption will rise by 1.1 million barrels per day in 2024. This is a report coming in from the IEA that is stating that. Now, while that is a 130,000 barrels per day increase from its previous forecast, this estimate is still less than half of the OPEC demand forecast of 2.25 million barrels per day. Now, OPEC and its allies led by Russia, remember, in late November agreed to a voluntary cut of about 2.2 million barrels per day lasting throughout the first quarter. Now, another bullish signal for oil markets on Friday was the lower drilling rig count from energy technology firm Baker Hughes. The oil and gas rig count, an early indicator of future output, fell by 3 to 623 in the week to December 15. So, well, we're seeing some mismatch when it comes to demand and supply, but let's see where oil prices pan out, Lisa.
That's on oil prices, but let's look at what are the important events lined up this week. We have the third quarter, the current account balance coming in from US, also the third quarter GDP, the PCE index, important gauge for the Fed. On the UK front, we have the CPI, UK GDP, Eurozone CPI, and back home, the corporate action front, Vedanta will be mulling and approving the second interim dividend. RR Cable, the lock-in period ends and 2.5% equity stake will be the focus, and SIS Limited buyback issue opens, as well as for SEPC where the right issue will be closing. Well, December 19th also marks the Accenture earnings, which will set the tone for IT earnings going forward. And on the IPO action front, on December 20th, it's a listing day for DOMS Industries, India Shelter Finance Corporation, and it's also the last day to subscribe for Inox India. So that was on the major events that we have to keep an eye on this week.
Well, with that, let's also shift to some stories that we've been tracking for you globally, and we'll bring you news from all across the world. And let's start by looking at what's happening in Gaza. And mass casualties have been reported in refugee camps, and as Israel continues to hit Gaza hospitals, killing at least 15 people in the attack. The WHO describes this situation as a complete horror scene and calls the destruction of Kamal Adwan Hospital appalling. So far, more than 18,700 Palestinians have been killed in Israeli attacks since the war began. Meanwhile, the Israeli army has found a vast tunnel which they claim is built by Hamas near the border crossing. The 4-kilometer tunnel included rails, electricity, drainage, as well as communications network.
And shifting focus to the world of global macros, the US Fed Reserve is seen standing by itself amidst a whole host of European central banks which are sticking to plans to keeping the policy tight well into the next year, dashing any hope that the Fed's pivot towards cuts marked a global turning point.
Staying with macros then, days after Fed's dovish commentary, New York Fed Reserve President John Williams said that it is very premature to be thinking about rate cuts as the central bank continues to mull whether monetary policy is in the right place to help guide inflation back to that 2% target. Meanwhile, the Atlanta Fed Reserve President Raphael Bostic expects that the central bank can begin reducing interest rates sometime in the third quarter of 2024 if inflation falls as expected.
And who doesn't like chocolates? The multi-million-dollar love affair has now turned into a serious business in India, with some retailers selling boxes for up to rupees 65,000 rupees. And Aishwarya Patil brings us a report on the factors that are whipping up the big bucks for the premium chocolate retailers like Coco Cart, as well as famous imported chocolate players. Over to you, Aishwarya.
It's December and Christmas is just around the corner, and chocolate, that's all over my mind. In fact, India this year imported premium chocolates worth almost $27 million. That's a massive uptick from its previous imports, which is almost 40%.
This might not be the exact order of the brands, but they are all in the top 10. Lindt, Ferrero, the Mars family of brands, Hershey's. Then we have the Mondelez portfolio, which is Milka, Cadbury and Toblerone. And we are also seeing very large numbers with Whittaker and Vedel. So when we started, 2.5 years ago, it was about 1,200 rupees was an average bill made at a store. 1,800 rupees was a purchase online. So typically we always see higher spends online. The 1,200 is now moved to 1,600 and the 1,800 online has moved to about 2,100. And we have seen huge offtake in gift boxes but in the 4,000 to 6,000 rupee range.
Speaking of the premiumization trend and the hunger for gifting of luxury premium chocolate boxes, this one here is Wenky's 54-piece, 5 kg, 4 flavors nougatine chocolate box. Now this is an Italian brand which Coco Cart has got to their stores, and already 5 out of their 10 pieces have been sold out. It is retailed at a whopping 64,999 rupees. In less than 10 days, the Christmas carnival and the holiday season begins. While most of the consumption has been subdued across sectors, it is the premiumization trend led by affluent class that has left a sweet tooth for chocolatiers. In Mumbai, this is Aishwarya Patil.
Well, thanks Ashwarya for taking us through that. With that, it's time for a break on this edition of Market Cafe. But you don't go anywhere because when we return, we'll take a look at how the Asian markets have opened up this morning. Hi there, welcome back and thanks so much for staying tuned to the channel. This is Market Cafe. Let's take stock of how the Asian markets have opened up this morning, and well, I'm seeing a flurry of red on my screen as we talk, and Asia Pacific markets have dipped today at the start of the penultimate week of 2023 after most markets in the region rallied last week. Let's start by looking at Nikkei. Nikkei is down a solid 400 points as we speak, 1.2% downtick coming. The Bank of Japan will meet for the last time this year, and a note from the Dutch bank ING said it expects the Bank of Japan to maintain all its major policy settings, though the overall tone about future policy at the press conference and the statement could start to soften. Even the Reuters poll of economists also expects the Bank of Japan to maintain its benchmark interest rate at that negative 0.1%, while inflation data from Japan is also due at the end of the week on Friday. On the back of that, you can see Nikkei down 400 points as we speak. Separately, let's also talk about China, because China will release its loan prime rates data on Wednesday as well. Hang Seng also in the red, 134 points down, 0.8 of a cut coming in on the Hang Seng. Shanghai, however, has managed to slip into the green, nominally not doing much but well in the green nonetheless. Shifting focus to Australia, the ASX 200 was lower 0.2% when it opened, continues to build on those losses, down almost 0.3%. It's snapping a 6-day winning streak when it comes to this Australia market. And shifting focus then, South Korea's Kospi, let's take a look at what that's doing. It also struggled to make headway, down almost 0.2% as we speak. Tiny cuts coming in for Kospi, but in the red nonetheless. And talking about our markets then, we managed to close at 21,400 levels, close thereabouts, and well, GIFT Nifty implying 21,485, a 72-point cut coming in on the implied open. So well, Lisa, let's see how that pans out for us.
Right, a nominal cut coming in there. Let's see how it pans out for our Indian market. But with that, let's go across to the...
Hi there, welcome back. You're still watching Market Cafe on ET now. Let's shift our focus to the media segment and talk about what's happening at Zee Entertainment, because media major Zee on Sunday said that it has sought an extension in the December 21 deadline of its proposed merger with Sony Pictures Networks Limited India. Let's go straight to Ankur to get more details on this. Ankur, over to you.
Yes, Zee Entertainment wants merger deadline to get extended with Sony, and for that a request has been made. Remember, there was an AGM which was conducted on Saturday. In that there were several shareholders who questioned about the merger deadline to be adhered to. The shareholders also asked question whether or not Puneet Goenka will be CEO of the merged entity. Remember, as per sources, Sony wanted its own India head as MD and CEO of the merged entity, because there is an overhang of SEBI investigation which is currently underway against Puneet Goenka, and therefore a deadlock has been created between Zee Entertainment and Sony on who will be the CEO of the merged entity. However, we have reported earlier that Puneet Goenka has stood his ground, and he has clearly mentioned that he should be CEO of the merged entity as per the earlier agreement which was signed with Sony. Now, all in all, an application needs to be made for merger deadline to be extended, and also an agreement needs to be reached who will be the CEO of the merged entity for the merger actually to be completed. In the shareholder meeting also, Puneet Goenka clearly mentioned that the next steps will be taken in accordance with the law. So we need to wait and see how soon the company files at the Ministry of Information Broadcasting for the merger application.
Thank you, Ankur, for that update on it. But moving on to the sugar sector, a lot of to and fro's happening on the sugar front. But now it's a big relief for sugar companies, because now the centre has allowed sugar mills to divert up to 1.7 million metric tons of sugar for ethanol production. Now this move is coming a week after the ban on sugar mills using cane juice as well as syrup for ethanol due to the likelihood of sugar shortage in the country. Now Samir Dixit is here with more details. Samir, what are you gathering from all this?
Relief to the sugar industry. the government has modified its order on ethanol. As per the revised order, now the sugar industry, the sugar mills and distilleries, they can use sugarcane syrup and juice for the production of ethanol. But the overall cap that government has fixed is 17 lakh ton of sugar that could be diverted for the production of ethanol. Earlier, on December 7th, the government came up with an order which totally put a ban on the use of sugarcane syrup and juice for the production of ethanol. After which we have seen that the sugar industry was in bit of a confusing state, that they were trying to understand that what is going to be the policy roadmap. The sugar industry met with the petroleum secretary. Later on they met with the PMO officials. Now, after understanding the overall situation, the government has modified its earlier order, and in the recent development, the government has said that to an extent of 17 lakh ton, this could be utilized. The sugar could be diverted for the production of ethanol. If you see the larger picture, now the order says that overall cap 17 lakh ton could be utilized for ethanol production. In addition to this, B heavy molasses and C heavy molasses can also be utilized for the production of ethanol. As of now, the revised order also mentions that the OMCs, they have to issue the order to the sugar mills and distilleries that what quantum that they are getting in from the sugar industry, that quantum has to be decided, that quantum has to be conveyed to the government as well. And sugar industry, mills and distilleries, they have also been directed that a specific amount can only be used for the production of ethanol, not for any other purposes. So this is a bit of relief to the sugar industry, which was seeking a more sort of clarity from the government. In addition to this, the government has already said that the overall move is a temporary pause, because they are going to do monthly review meeting and will take further steps after taking the stock of situation.
All right, thanks, Samhi, for all of those details. That's a lowdown on everything that's happening on the ethanol production front. But we also managed to catch up with the Shakti Sugar CMD M. Manikam, who welcomes the government's decision to remove the ban. Listen in to what else he had to say.
The abrupt decision of cancellation of that has been reversed. So that will probably help. But, the doubt always remains that the government can always exercise its power every time. So you're not sure about whether this is a long-term policy or a short-term policy.
Right. So there needs to be more clarity on that. But how are you, of the 825 crore litre of ethanol to be supplied to the OMCs, how much was supposed to be produced via using sugar cane juice?
Yeah, that's actually via sugarcane juice or bee molasses we can do. And what we have to do is take a decision as to which one is possible. You don't know, the government is going to decide which route you're going to use. That's the problem. So the government is going to decide whether it's going to be bee molasses, sea molasses, or juice. So if I start doing investments, what do I do my investment based on? Do I look at long-term policy or do I look at ad hoc policy?
So that definitely is something that needs to be, that needs more clarity. But when you're looking at this 17 lakh tons of cap, Mr. Manikam, how does that particularly come into play?
This cap is okay for the current year. I mean, this current year you're talking about 1.7 million, which is fine. I mean, that's not a problem. But long term, we need to see what is going to be the clarity, because the basic problem, the government doesn't want the sugar prices to go up. And we have the lowest sugar prices in the world. So there's no logic why the sugar prices should not go from what it is there today. So that is a basic problem that we always have, and we've had for the last 50 years. And, sugar prices are not a holy cow. They also have to be, if petroleum can go from 10 rupees to 70 rupees, 100 rupees, why can't sugar go from 30 rupees to 50 rupees?
So that was on sugar companies. So that was a positive news coming in there, and expecting a positive move for the sugar companies today. But moving on to Vodafone Idea's fundraise has been delayed yet again. And Somit is here with all the details. Somit, Vodafone Idea's fundraise plans has been delayed again. So what does it mean for Vodafone?
Well, if you see, Vodafone Idea and Industars both will remain in focus. Now, this is because Vodafone Idea's fundraise plan has been delayed yet again. Now, the Economic Times article clearly says that the Vodafone Idea is now exploring an option to sell and lease back its fiber asset, and it also says that the fundraise plans have been delayed as a US-based digital infra firm has backed out at the last moment. Now, just to give a backgrounder here, Vodafone fundraise is the the most critical part for Vodafone Idea's survival going forward, because it has been looking to raise funds for at least the last 2 years now, and owing to lack of funds, the company has not been able to start its 5G operations and has been continuously losing subscribers since the merger has been completed. Now, this delay in fundraising is also incrementally negative for Indus Towers, because Vodafone Idea is one of the key clients of Indus Towers, and the company is yet to recover the past dues. So a delay in fundraise could also mean that the dues recovery from Vodafone Idea for Indus Towers could be delayed going forward. Now, will the fiber asset sale happen, which the Economic Times article is talking about? Now, there are chances of this fiber asset sale is less likely. Now, this is Vodafone Idea's second attempt to sell this. The first attempt was done in 2019, and that failed owing to a valuation mismatch or valuation issues with the seller. And this time also it might not go through, given the fact that there's a going concern risk for Vodafone Idea. Now, in sale and leaseback model, Vodafone Idea will be the major user of this asset, and given the fact that there is going concern risk, the chances of any buyer bidding for this asset is also less likely going forward. Now, in 2018, do remember that Vodafone Idea had sold its tower assets to American Tower Corporation, and this company, that is ATC, is currently struggling. Now, ATC is also looking to completely exit from India, and in September ended quarter, ATC had took a hit of around $322 million US, that is close to 2,700 crore rupees for its India unit. So keep an eye out for Vodafone Idea and Indus Towers in trade, given the fact that fundraising plan has been delayed and the plans of selling the fiber asset will less likely go through going forward.
All right, Samhi, thanks so much for taking us through that. You've got a whole host of telecom stocks like Vodafone India, Indus Towers, as well as Bharti Airtel that will be in focus today. Also on the back of the Telecom Bill 2023 that's likely to be tabled in the Lok Sabha today. But moving on, many brands to extend festive sales to clear inventory. That's the word coming in from Panasonic Life Solutions. Talking to ET Now, the company's management spoke about festive sales extensions to clear the inventory, impact of the PLI schemes, and low AC penetration in India. Listen in to what they had to say.
It might be such that we are in the winters right now, but this is the very logic of the supply chain, which is for products like air conditioners. The total supply chain of air conditioners is such that the lead time between introduction to say the time when the product is installed at consumer's place is very long. It might be as long as about 6 months. Okay. So therefore, if we have to prepare for the summer season, the action should start much early. That is the reason that we are making this very strategic announcement now. And I wanted to reiterate this, that this is not necessarily about us preparing for the upcoming summer season, but this is something like we are trying to run a marathon to update and upgrade the lifestyle of people. Okay. And I will elaborate a bit here that what is the detail about this new introduction, this new innovation called Matter. Which we are starting off with air conditioners.
And how you are analyzing the summer cycle? I mean, when you have introduced this sort of tech development, what is your understanding for the summer season?
See, when it comes to summer season, I think a couple of products at least, if not more, air conditioners and refrigerators come to our mind. And when you look at our country, the penetration rate of air conditioners in our country is less than 7% of the total households. And this is less than 7% of the total households.
Okay. My last question would be related to the logistic part. Government has been constantly pushing to reduce the logistic cost. Okay. So, have you seen any sort of difference? And also, are you seeking the kind of optimism you have in terms of growth? Looking to expand your presence, any new investment plan that you want to share?
So if you look at the program, the PM Gati Shakti program, it essentially on the top focuses on two aspects of reducing and improving the efficiencies in the logistics space. First is physical, second is digital. And physical is something which we can see. If you look at last 10 years, the physical infrastructure, including the roads and any other medium which helps transport goods from one place to the other, has significantly improved. And just go back 10 or 12 years before, for the southern tip of the country, we used to take about 10 to 12 days for a material to shift from a factory in the north to that part of the country.
And that was Panasonic Life Solutions management talking about the outlook ahead for the company. But shifting focus on the auto sector, taking forward its premiumization drive, TVS Motor has now launched customized bikes on RTR Ronin platform, and this is also a new bike, RTR's 1604 that has been launched with dual channel ABS at rupees 1.35 lakh. Now the company says that it will launch more products to help it compete with Hero Harley's, Bajaj Triumph and the other joint ventures. So listen in to the interaction that we had with TVS Motor Management.
So we, accessories I would broadly divide accessories into three categories. One is your safety related, your leg guard, sari guard, right? Then something related to the beautification of the bike, right? That's your mirrors, that you want to have a different kind of a leg guard, you want to have a different kind of a sum guard, you want aluminized, you want steel, or you want, painted in black. So we have developed in the last 1.5 years another additional 20-25 accessories to personalize your motorcycle, which you can buy from our dealers. Of course, they are the best in the quality and your warranty is not void. So that's what we want to bring, then authentic accessories from TVS, which makes your bike even much better than the stock bike.
Well, you took over last year. A lot has happened. You have brought a lot of changes, doing good for the company. Share price you have seen moving, but a lot of competition has also come in. Hero, Harley, Bajaj, Triumph. How do you tackle that? Is that the only answer to that, or you are going to stick to what you know the best, and what are you doing is the best thing to clearly compete with the other competitors in the industry?
So look at TVS company is a 111 years old brand. It's a rich pedigree, rich history, and if you look in how TVS from the basic inception, we launched in the TVS Motor Company was formed in 1978. 80 first product was made. 82 went to racing. Then from that time, the journey has been all about performance and premiumization and bringing the products which are the best in the category to the customers. With Apache, it created a tribe, and now we have 5 million odd customers. We want to keep that pedigree on. We want to bring more products which are accessible. We really want to bring experience to the new level. That is why this festival is there. This is a global festival of motorcycle. You have customers from across the world. There are people from Europe, there are people from Latin America, there are people from Africa, there are people from India, and this is what we want to build in the premium, where we want customers to be our brand ambassadors, because as a company we believe customer-centric approach is the best, and that's what we are known for, and that's what we keep doing.
Alright, with that, it's time to slip into a very short break on this edition of Market Cafe, but we'll be right back with more stock-specific news and updates.
Welcome back to the show, and thank you for staying tuned in. Now we are on that part of the show where we talk about the stocks that you have to keep an eye on. Let's start with the stocks that you have to keep an watch on. Gandhar Oil Refinery, the newly company, they came out with their earnings. Not a good set of earnings, quite a weak earnings reported by Gandhar Oil Refinery because the revenue that was down 6% on sequential basis, and even the EBITDA that was down around 10% on a quarter-on-quarter basis. EBITDA stood steady at around 7.6%. Even PAT that was down 11.2%. So that was on Gandhar Oil Refinery. Moving on to Macrotech, the company has completed realization of its entire balance as per the earlier guidance given by UK Investments. Now the last tranche of this realization that happened on 13 December, and post that the company has exited from the foreign market by disposing of its entire equity and other security investments held in entities in relation to UK investments. So now they don't have any investments left in UK. Moving on to Mascot Dock Shipbuilders Limited, they have informed on the receipt of international shipbuilding order for the construction of 3 7,500 DWT multi-purpose hybrid powered vessel. So that's largely coming in on my radar. Snehi, what are you seeing? Which companies will be in focus?
Yes, I'm looking at two companies today, and those happen to be IRB Infra as well as Zydus Life. Let's start by talking about IRB Infra. The associate received an award from the NHAI for tolling operation as well as maintenance. Now, the trust will pay upfront concession fee of 1,683 crores to the NHAI for revenue-linked concession period of 20 years. The associate's asset portfolio will increase by 4.3% to 47,000 crore rupees. So, well, that's why IRB Infra will be in focus today. Let's also talk about Zydus Life because, well, news updates, major news updates are coming in for Zydus Life. It has received the final approval from the US FDA for its lacosamide tablets, all across ranges like 50 grams of milligrams, 100 milligrams, 150 as well as 200 milligrams. And it has an annual sales of 249 million in the US. Now, the product will be manufactured at the group's formulation manufacturing facility in Moraiya, which is in Ahmedabad, and it has also received another approval from the US FDA to initiate phase 2 clinical trial of the ZYIL1 in patients with Parkinson's disease. So, well, on the back of this, you've got IRB Infra as well as Zydus Life. They will be in focus on the back of their respective news flows.
Right, so all these stocks will be in focus. Keep an eye on these stocks. But let's talk about the FNO and what are the levels that we have to keep an eye on the Nifty. Good morning, Ansh. So take us through the FNO snapshot, and also Nifty closed a little about 21,400 levels. So what levels are you seeing for today's trade?
Right, good morning. So starting with Nifty, you rightly said Nifty has touched 21,400 mark for the first time. However, the RSI is also at 85, which is a 2-year high. This indicates that Nifty is sliding into overbought zone currently. Let's see what happened in FNO segment. Open interest in Nifty went up 0.3%, indicating long build-up, whereas on option front, we are seeing highest call at 21,500 and most active call at 21,700, indicating traders not only expecting Nifty to go above 21,500, but also to touch 21,700 by the weekly expiry. While on the downside, we saw strong put writing at 21,300, indicating strong support base around this level. Talking about options, Nifty PCR touched 1.44 level. Well, this is a bit of a cautious signal for the market. Shifting our focus to what FIS did. In cash market, they bought over 9,200 crores of net equities, which is the highest buying seen in over 5 months. Well, this shows the optimism in the market. In index futures, they added 8,200 longs. They covered 6,600 shorts. So net to net, we are seeing an addition of around 14,800 contracts on upside, due to which the total long position has inched higher from 57% to almost 60%. So in a nutshell, despite market touching a record high, it is still getting into overbought zone. So this is not a very this is a risky level to get into the market. One should wait for some correction to buy on dips.
Alright, buy on dips. That's the call coming in from Ansh this morning. Ansh, thanks so much for taking us through that. Let's shift focus to the primary markets then. And you've got 3 IPOs opening today, and one of them is Moti Sons Jewelers. Ashesha is here with all the details about this IPO. Ashesha, take it away.
Well, yes, relatively small IPO, about 151 crores is the total IPO size of this IPO. Remember, it is a complete fresh issue, no OFS. About 2.74 crore shares will be issued in the price band of 52 to 55 rupees per share. It was incorporated in 1997, and as the name suggests, it sells jewelry made out of gold, diamond, kundan, as well as other jewelry products such as pearl, silver, platinum and other metals. And it has 4 retail outlets in Jaipur, Rajasthan. Remember, it's a 151 crore IPO, and the company says that it will be used for repayment of debt, for funding working capital requirements and for other general corporate purposes as well. As far as financials are concerned, it generated revenues of about 366 crores in FY23 and about 87 crores in the first quarter of FY24, and margins have been strong, double-digit, healthy at about in the range of 12 to 15% over the last 2 to 3 odd years. As far as valuations are concerned, remember, it rates at about 22.3 times FY24 price to earnings and 18.6 times FY25 price to earnings, and as compared to its peers, it looks reasonably priced. So yeah, relatively small IPO, 151 crores and complete fresh issue.
Ashesha, for taking us through Moti Sons Jewelers IPO that will be opening its subscription today. But it's raining IPOs because Muthoot Microfinance is another IPO which will hit the streets today, and Gaurav is here with more details on the company. Gaurav?
Some companies which are focused on the back of the brokerage notes, and the first one we have is Century Ply, where Spark Capital has not only upgraded the target from reduced to buy, but they have also increased the target price to 925 rupees from their previous target price of 600 rupees per share. Now they believe that the company is ready to commence the capacities in the high growth segment, which is MDF, laminates and particle boards. They also believe that the current margin trajectory for the company is likely to sustain, because we have seen that the timber pricing cycle, which was prices were high, which is now behind this, and this is going to increase their raw material margins, and it is going to boost the margins for plywood and laminate segments, and that is why they have hiked the target price for Century Ply to 925 rupees per share. The next one we have is SJVN, where Goldman Sachs has downgraded the rating to sell from their buy rating, but they have hiked the target price to 65 rupees per share. They believe that there have been large plant which were supposed to commission, but because of the delays is going to impact the FY25 earnings for the company. They also believe that the Renewable Energy Implementation Agency, which is a part of the company, is going to add 3 to 13% to their target price going ahead, because the segment is doing well, but this could stress the balance sheet of the company. Going on, they also believe that the risk reward for this company right now is unfavorable despite the rise in TP, which is by 13% from their previous target price, and that is why they have downgraded the rating to sell rating. The next one we have is SBSC Finance, where Axis Bank has initiated with the add rating and target price of 105 rupees per share. So the bank is getting into MSME segment. The penetration for the bank's MSME segment is low, and that is going to drive the AUM growth almost by 30% CAGR going on. They also believe that they have robust underwriting, which is going to support their NPA ratios going on. They have strong management and execution cycle, and they have recently raised the capital, which is going to impact their ROE for the next 2-3 years. But given that they have valuation 3.1x the price to book value of FY26, this bank actually looks attractive in terms of valuation according to Axis Capital, and that's why they have initiated with add and a target price of 105 rupees per share. So let's keep an eye on all these companies as well.
All right, Gaurav, thanks for that list. Lots of stocks being flagged out by lots of brokerages this morning. But Gaurav, let me come back to you for the IPO that's going to come out on Muthoot Microfinance. That opens today. So take us through the IPO snapshot then. Okay, I believe we have lost the connection with Gaurav over there. We'll reconnect with him in just a bite. But in the meanwhile, let's catch up with the rally in large caps, and that is due, which is what MK Global's Krishna Kumar Karwa is saying. He expects the FIIs to continue to buy into banks. Also listen into what more he had to say.
Some sector there is a lot of momentum, news flows, positive news flows. You will tend to see many of the stocks in that segment getting overvalued and maybe discounting 3-4 years forward earnings. And yes, you could possibly say that for some of the stocks that you were mentioning in the course of the conversation. So yeah, I mean, the market seems to be in a lot of tailwinds also, actually, honestly speaking, after the state election results and now what the US Fed has indicated as far as interest rate trajectory going forward. So these only add to the overall positive momentum which was always there, which is in terms of the domestic GDP growth, IIP numbers, robust inflows from domestic investors, and now hopefully going forward next year we should see very robust FPI inflows, and and that should lead the large caps, which have relatively underperformed versus the small mid caps in the last 1 year. I think a huge catch-up rally in the large caps is on the way.
Okay, I'd like to draw your attention to the big pivot by US Fed. Interest rates have peaked out and they will come down. Now that's a very powerful change for the market. 2021 and 22 and 23, we had to deal with rising interest rates. Now interest rates have come down. What will happen because of that?
As I said, one is that the whole soft landing of the US economy, that kind of is given once the interest rates start correcting, and that should also obviously give an impetus for flows to move out again from the US to other emerging markets, and India could possibly be a prime beneficiary of that. Right. And more than that, I think also if you feel that the US economy is stabilizing or there's a soft landing, then the whole economic atmosphere over there, or rather all the IT companies, they should see the positive benefits out of it in terms of all the decision making which was kind of deferred at their end. I think all those things should make a comeback. So from that perspective, if I were to look at it, then good news flows for Indian companies because of the US economy stabilizing or achieving a soft landing and interest rates coming off. Plus valuation multiples, I think falling interest rates will always obviously lift the valuation multiples also.
Sure. So within large caps, given that you are betting on large caps catching up with what the broader markets have done so far this year, what's going to lead that catch up?
So obviously, I think it is the financials and possibly the IT companies. I think they should be the ones which should drive the large caps, and financials have relatively underperformed in the last 12 months, and now they have started catching up. So obviously, that's one segment which should.
And with that, it's a wrap on this edition of Market Cafe. Thank you for watching, but stay tuned as we shift all the action to the market. For now, it's a goodbye from me as well as Samhi.
In the fast-paced